so I'm gonna make this real quick. Some of you wanted me to change the background of where I'm doing the video. So now we're in Costa Rica, okay? Yeah. Yeah, anyway, I'm gonna make this quick because I'm actually low-key doing this on my lunch break. Hey, so we gotta talk about GameStop. I was gonna make a video about it and what I did with AMC, shit. I'm gonna kind of run through this real quick because I have to go, and I was gonna put on Instagram to answer some of y'all questions, but I just don't have time. But basically what is going on is people have been betting against these companies for a long time. Companies like GameStop, Fossil, AMC, GNUS, basically any company, BlackBerry, any company that you think is like kind of trash and outdone and over with, people have been making money betting against them, what's called shorting them. They've been shorting the company, placing a bet to say like, hey, I bet you this company is gonna go down to this much. If it hits that much, then they make money. But if it goes the opposite direction, you lose money. So basically you can make money both ways. You can make money by owning a stock and letting it appreciate value over time, or you can make money by betting against the stock and saying like, hey, it's at $15 now, but I bet you it's gonna go to $2. I'm gonna short the stock at $15, right? So let's take that concept. So what's been going on is people have been betting against GameStop because GameStop sucks. We all hate GameStop. No one shops there. People are saying like, yeah, they have PS5 and Xbox. They don't even have that available to sell. You can't even find one at GameStop. And when they did, they had like 2 available. It's a brick and mortar store. Amazon, you can buy the games online and have it shipped to your house. Why even leave? Everything is digital now, like who cares, right? So GameStop is probably gonna die. But the point is, just like when Hertz went bankrupt back in the day, right before they ended, people were shorting Hertz, but they squeezed some money out of it. And what happens is, anytime you short a company and a bet against a company, you are borrowing shares, okay? So you borrow shares from the company through your broker, or you borrow shares, however, you borrow those shares, and the company or the broker does not care about how much money it is. They care about the share. They want their shares back. So let's say that you borrow 100 shares at $10, okay? And you say like, hey, I bet it's gonna go to $2. If it goes down to what you say, what you think, you make money. If it doesn't, if it goes the opposite direction to $11, $12, $13, you are losing money, okay? So what happened is, the word is, all these people on Wall Street bets or just regular investors or whatever, they saw the float. They saw how much these companies are getting shorted, and they were like, you know what? I bet you that I can squeeze some money out of them. I can put them in a squeeze. If we push this stock up to $30, at 15 right now, just hypothetically, if we push this shit up to $30, we get this, we put enough shares and we buy enough to get it $30, that's gonna squeeze them out of their position. They're going to have to cover their shorts. So remember what I said, it doesn't matter to the broker or to the company what the value of that stock is. All I know is you owe me 100 shares, you owe me 10 shares, however much you borrowed away from me, okay? So some people might get hit with what's called a margin call. It's a lot of shit to go over, man. But the short of it is, if you borrowed shares and you owe those shares back, and that share went from $15 to $30 to $100 or whatever, and you have to cover that, now all those shares you have to buy it at $100. So now you bought it at $100, people saw it, and they're like, oh shit, it's going to 110, so they buy. And now you got to cover more, and it's just this domino effect, and it just goes up like a line. It's called a squeeze. They're getting squeezed out of their positions. And if there's more money that's being borrowed as far as shorting the company than the company's worth, which is kind of what happened to GameStop, you'll see some crazy shit. And that's super rare. That really doesn't happen. Only one that ever happened anywhere close to was Tesla. So that's basically what's happening. You can look up more videos to explain that if you don't really get what I'm saying, because I'm kind of rambling. But the point is, yeah, it's a short squeeze, man. It's people who are betting against a company and they are losing their bets, and they have to cover those bets just like they would in like a horse race or something. They have to cover those bets and pay back the shares, not the money, okay? The money isn't the issue. It is the shares, all right? So now that we got that, so that's what happened with GameStop. I saw that yesterday and I missed GameStop. Instead of chasing GameStop, I was like, man, GameStop's gonna crash. But I bet you there's other companies that have a similarity to what GameStop is going through. There's other companies like Fossil or like Express. And I was just thinking, I was like, man, what's a solid company that probably will make it, that actually has a reason for you to kind of invest into? And I looked at AMC, and I saw AMC going up and down, It was $2, it went to $4, and it was just kind of floating for a minute. It was consolidating is what it's called. And I was like, you know what? I think AMC is probably going to run. Let me just grab a few shares of AMC. I was going to grab a call, which is like 100 shares. I was going to grab like 100 shares of AMC, but I was like, nah, I don't want to put that much money in just in case it's just a hunch. Let's see what happens, right? So what happens is I bought right at the bell, I bought AMC, and it shot up overnight. So there's another point that's called circuit breakers. And the short story is that after hours, it's kind of like a free-for-all a little bit. It's not, there's circuit breakers go throughout the day. So like if you see a stock and it goes all the way up here and it goes here and it just pauses like a huge candle or a huge movement, it might hit a circuit breaker, which will stop the stock. It will pause the stock. The Security Exchange Commission will pause the stock. Everything will stop for a second. They'll let you get a breath and then it will move again, okay? But after hours, circuit breakers are off. The people go home. It's kind of a free-for-all. Not every broker even allows you to use after-hour trading, so it doesn't really matter too much in most cases. But nowadays, there's so much liquidity in the market and so many people in the market. After hours can be a game changer. You'll go to sleep and your stock can shut up like $50 or something like that. A million people have traded after hours, or however much. So AMC was like at I think like $8 or something like that. After hour, it shot up to like, I think the opening bell was like $20. And yeah, I mean that's kind of what I didn't think it was going to $20. I didn't really know. I'm still holding AMC. If it drops down, I might buy more. I really don't know. It's just really just kind of, this isn't a fundamental thing. Low market cap stocks and they're flying all over the place. This is where it gets crazy. You have to make that decision on a dime, because now I have 50 shares. I could mess around and have 2,000 shares or more. And I have so many shares, and now it's like, well, shit, if I don't make that decision, that $1 can cost me, $10,000 or something like that. So now you have to make those decisions. And that's why I say, like, if you're newer to the stock market, you stay away from this stuff, because that volatility, the way that things move are super hard and super quick. It will scare you out of your pants, and you'll mess around and lose all the money. So as far as me holding AMC, I'll probably hold it. I'm holding it right now. I'll probably hold it after hours and see where it goes. I think it's probably going to drop back down to 16 and float around and consolidate. It looks like it's forming a wedge. I don't know which way it's going to go just yet, but I'm not going to jump out of it, because I truly do think at the end of the day, AMC might come back. I don't think they're worth like whatever valuation they're at right now, probably. But I think if there's all these stocks that are going crazy and people are running out and just buying trash, AMC is probably one of the better trash to buy, I guess, because movie theaters are still around and we just can't really use them right now. And there's a good chance that AMC is already kind of towards the end of everything. If they were going to go bankrupt, they probably would have already. I think we're towards the end of a lot of this. At least that's the perception. So AMC will probably come back. Even though Disney and these movie theaters are pushing movies, these movie people are pushing movies to your TV. Even though that is happening, you can still have that experience of going to the movie theater, and you still have people who want to go there. The next time, another Avengers or something goes on, you're probably going to see it in a movie theater. You can pay $30 on Disney for Disney Plus to watch Mulan, or you can experience it at the theater for like $20. I mean, maybe popcorn. I don't know what, but a lot of people rather go to the theaters. It's kind of a thing. You go on dates, whatever. It's a thing. So it's probably going to come back, and it probably will float a little bit higher than $10. Maybe. We'll see. We'll never know, man. I'm just glad I got it at 50. If you want to grab it, I would say look for it to kind of go down a little bit. I don't know what it's going to do after hours. It just really depends. We have earnings going on. It's a lot going on as well. The other crazy part about this whole thing is because of companies like GameStop is shooting up so much, and all these big corporations, there are corporations and hedge fund managers that literally make their entire careers off of betting against stocks. Like their entire identity is based off of betting against like GameStop or trying to short Tesla or whatever, right? So they're losing a ton of money, millions and billions of dollars, dude. They're losing, like they bet 100 million shares or some crazy number, right? And they lost it. They had to pay that. They had to buy that back at a higher price. So now since they lost all that money, they have to take money away from bigger positions they have in other companies like Apple. Shit. They have to take money away from bigger positions like Apple or Microsoft or Tesla, and it's causing the market to crash. It's really nuts how all this works together. But basically, it's like a story of David and Goliath, where the small guys who betted on the small companies and just had a little bit of dollars are now taking all the money that is coming from Apple and stuff that goes into GameStop, It's really crazy, and that's kind of what you're seeing. The market got killed today, but a lot of it is based off the idea, at least that's the consensus is, some of these hedge fund managers and people who have a lot of money have to take some of their money out of bigger positions and cover their calls. So all the $1 million they have in Apple for the last 10 years, they got to take some of that out and cover some of the Gamestop they lost or the AMC they lost or whatever. And it's this crazy, crazy thing. It's like the internet is fighting against the big people and they're kind of winning and like all this stuff, man. It's really nuts. Yeah, that's pretty much all I got. Just want to make this real quick to explain what's going on and my thoughts. Yeah, and I hope this works for you. I hope this helps. Hope this helps. You know what I mean? Yeah, that's all I got.